Good morning, good afternoon, maybe even good evening. Thank you very much for joining us today for a 45-minute conversation really about basically the enormous opportunities that lie in the European settlement infrastructure and zone, and how we can be looking to harvest up to about 37 million euros of efficiencies from basically doing things differently. So my name is Barnaby Nelson. I run the ValueExchange, and it's an absolute pleasure to have a range of real experts today to be able to talk through really what does different look like in practice, in particular with a heavy emphasis on the words in practice. So Marcus, Matthew, Dirk, it's really great to have you here. Perhaps I'll just let you guys introduce yourselves briefly, and then we can get straight into what we're talking about, why this is critical, and obviously what does this mean for everyone listening. So Marcus.
Thanks, Barney. Thanks for having me. So Marcus Austin, I am the Regional Director at Clearstream, responsible for our client franchise in the UK, Ireland, and the Americas.
Thank you, Matthew.
Hi, yep, Matthew Keys-Lumley. So I'm the Global Head of Network Management, Treasury Operations, and Cost Operations at Barclays.
Thank you. And Dirk.
Thanks a lot, Barney. And my name is Dirk Loscher. I'm the CEO of Clearstream Europe, and I'm also running custody and investor solutions for Clearstream globally. So anything to do with settlement, asset servicing, tax, and global network.
Brilliant, and thank you. That was just literally the order of the screen, so no one should infer any priorities from the order that we started in. So, what are we going to talk about? The headline of the conversation is transforming balance sheets in Europe, and realistically, this is basically around an entire conversation around how we can obviously do things, as I said, differently. Specifically, I just want to walk through a few really short points just to be able to frame the conversation that we're going to be having. First of all, why are we having this conversation? I mentioned at the beginning 37 million euros worth of opportunity here. There is an opportunity that is materializing today for us to be able to look differently at the way we settle trades in Europe, fundamentally leveraging all of the work that's been going on for decades now, really, with T2S in particular, and leveraging, or rather protecting ourselves against future change. There is a significant opportunity, whether it's 37 million, whether it's 15 million, whether it's 50 million, there is a significant opportunity that accrues both to operations and also to treasury, which is a point that we're going to dig into to start making the most of new chances. What do new chances look like in practice? We're going to go in obviously to a lot more depth on this, but fundamentally we're talking about, how do we settle trades across multiple markets on a single infrastructure and in a single way. So following on from all of the announcements from Clearstream Europe last year, what we're talking about here is ultimately being able to leverage a single FMI against basically following on from trade settlement T2S, using central bank cash to be able to aggregate and consolidate an entire region of exposures into a single balance sheet. Now, that consolidation piece is so important because ultimately, as we dig into the whole conversation about really where does that 37 million euros in benefit come from, a lot of it is just derived from that consolidation piece. When you think about the netting benefits, running a single European balance sheet with all of the efficiencies that can create is a large part of the benefits that we're going to be running through here, and we're going to dig into this in a lot more detail. But for me, the key thing is that ultimately a lot of this is the benefits of consolidation, not just from a current perspective, but also when you consolidate, what opportunities does that open up in terms of greater flexibility, more aggressiveness against cutoffs, and so on and so forth, to be able to run and sweat your balance sheet, frankly, more than ever before. But ultimately, the last point I would just touch on, just to scene set, is that this is, I think, this is part of a journey, and I think, there's been much discussion around, European settlement models and continuing. But, there is a starting point, there is a current point, and there is a future point to all of this. And I think, one of the things that we'll be digging into through this conversation is where we are on this journey from, the work that needs to go in go on in order for a bank or broker even to be able to start on this journey. So the whole question about how does an organization become self-funding and what that means, to the areas where this actually can really apply meaningfully to the organization in terms of activities, but also where it isn't, and where we're going. So, for me, I think the reason this is a fascinating conversation is because A, it's big in terms of benefits, B, because of the fact that it exists today, and C, because ultimately it's going to be something that it has many, many benefits that will continue to accrue as we get closer and closer to this over the next few years. So I hope that's a reasonable scene set. And I guess if you think about how we're going to break this down, we're going to spend about 5-10 minutes just talking about kind of current statements in terms of why we even need to be having this conversation in Europe today. So kind of current challenges, current problem statements. We're going to talk about the solution itself. We're going to spend 10 minutes kind of talking about exactly what it means, how it works. But then, obviously from a practical perspective, anyone joining this call is going to be thinking, okay, how does this work for me? So the question about how does this become an operational reality, leveraging particularly Matthew's experience of actually just using this on a daily basis, being able to actually dig into that and actually get a really good view of essentially what this can look like in terms of getting ready and the benefits. Those are the points we're going to cover off in the next 45 minutes. So, Marcus, I'm going to come to you first of all. This wasn't just dreamt up on a whiteboard. This whole solution that you're now live with was obviously conceived out of many discussions with clients, many kind of problem statements. How would you characterize the kind of the challenges and the landscape that organizations have been facing that this solution starts to become an answer to?
Yeah, sure, Bonnie. And as you said, this is not new, right? This idea of a single access point, whatever you want to call it, pan-European CSD solution, this idea has been around for some time. And why I think it's really something that is catching the attention now, and certainly a large number of customers we're talking to are interested in this, is just so many things going on in Europe, a real sense that we are moving towards a more harmonized Europe. We'll talk a little bit more about that later, but this question that gets put to us on a fairly regular basis around operating models. And again, depending on the type of client you speak to, will determine where the kind of questioning goes. But for those very large financial institutions that have big trading books, the key question is always around use of capital, and the idea that there is an opportunity, excuse me, within the model to essentially self-collateralize, so use your assets that sit in the T2S system to collateralize your trading activities. It's particularly interesting for banks, especially those that have to hold significant capital against lines of credit that are unsecured or unadvised. That's probably a key driver of conversations, and I think this kind of need to ensure that you're running the most efficient operation you possibly can is certainly front and center. I think the second point is just really for clients looking at their operating model and accessing potentially Europe via multiple channels. The question comes to us regularly. I mean, how can we simplify that?
No, brilliant. And I think, straight away we're talking about capital efficiency, and we're talking about, as you said, a greater focus on just making the most of what you've got from a balance sheet perspective. Matthew, that inherently means that, I suppose, are we talking about an operational solution that really benefits Treasury? Or how do you see, when you speak back into everyone in your organization, how do you see the different, I suppose, stakeholders internally in terms of driving this and winning from it?
Yeah, totally agree with everything Marcus has said so far, and he's stolen many of my important lines. But that it's absolutely being seen internally as both an operations and a treasury imperative. This is a problem that manifests itself every single day in both parts of the organization. I'm fortunate enough to see kind of both parts as well, with my treasury operations role as well as my network role. And within operations, we see real friction each day when we have things that are blocked, when there are needs to inject funding in a really sort of time critical manner. But then I equally see it in my treasury role and facing off to our treasury stakeholders internally, because this has a direct impact on our intraday liquidity usage. It has an impact on our buffers and our limits that we monitor and manage against each day. And then equally, as each large organization will feel as well, there is a strive to optimize the efficient usage of our cash and our collateral. And so having things locked up or used early in the day that otherwise could be more efficiently used is causing us pain there as well. So very much a real-time, very critical operations issue each day that we're looking to build upon and hopefully help tackle through this sort of model. But equally in the treasury world, very real economic impact for the firm as well. And that's why I think in my role, sort of uniquely placed internally to try and bridge that gap. And we've been looking heavily, obviously, at this model.
Yeah. No, thank you. Because I think for me, as is in our paper, you've got 84% of the overall benefits that seem to accrue to the treasury side, so to the latter part of your day job, I suppose. But I think it's interesting because I think as an industry we tend to focus on the operational piece and think, okay, this is about just basically fewer pipes and fewer all this kind of thing. But actually, that ostensibly it's a kind of almost a nice to have by comparison. But I think for me, what really stands out from what you were just saying is that the fire drills and the constant effort that needs to go into massaging that infrastructure is you've got the economic impact, but you've also got that kind of the risk, somehow cost of risk impact on all of that as well, which I assume your day job gets a little bit easier hopefully when this all comes through.
It certainly does. It certainly does. And not just for my teams, right? This impacts our settlements functions, our fixed income financing businesses. It impacts our treasury desk. So that this has a big impact across the firm that this is then aiming to make some real inroads in addressing. And we're seeing positive parts of that already. Yeah.
And obviously, I mean, Marcus has already mentioned it, but Dirk, this is a moving train in Europe. I mean, we come from a place where obviously a lot of investment has gone into T2S and all this kind of thing. But how would you characterize where we are on the journey of kind of, many of these challenges are becoming more acute and new challenges are also presenting themselves. So, where we come from, this is an idea that's been out there for a while. This is becoming, as Matthew says, the economic case increasingly compelling. How would you say this is evolving?
I mean, you said it. It's an ongoing journey, and we have come a good way in between. It has taken quite some time and a lot of effort to get where we are today. But we can see that there is a big push for consolidation across Europe right now. It's looking at the CSDs, but it's also the market participants looking for opportunities to streamline their activity. So we are looking at what we can do to support this. And for us, most important is that we can give optionality to clients. When you look at it, our investors CSD solution allows to consolidate at own pace, right? So you can add specific asset types like fixed income first and equities later. You can add specific markets, starting with the smaller ones and then only later on adding bigger ones. And we can also see it depends a little bit on the client type. So those market participants entering new into the space, like the neobanks, for example, very naturally are using our pan-European CSD model. So they have a direct account with us. And with that account with us, they then basically do their European expansion seamlessly and comparing the opportunities and the options they have, going direct into the other markets or using the one account with us, they naturally come to the conclusion that for them it's the best way to move forward with the one account with us. And others who have invested into certain setups in the past, they basically have to review, is there sufficient upside for them to move certain activity into the pan-European CSD model. And we see more and more traction now. And there are more and more market participants seriously considering and actually moving their activity into our pan-European CSD model. So I think we are on a very good way, but there's still also the commitment from our side to continue the investment and further expand into new functionalities, better service capabilities. And it's a journey. And we are very much looking forward to continue that journey.
Yeah, but presumably, I mean, well, we've gone 18 minutes without mentioning T+1, which is a record for us. But presumably, though, this is also a major accentuator of pressure. I mean, if this is ultimately, back Matthew to your point about removing the fire drills, not having to massage the pipes every day and having that economic benefit, presumably all of that is going to be multiplied the minute we're actually trying to settle trades in, well, whatever it is, 82% faster. I can never remember the exact percentage, but when we lose a day. So presumably, Dirk, is that one of the reasons why people are kind of tapping on the shoulder, do you find yet, or is that something that you think is to come?
It's definitely one of the elements. I mean, a lot of market participants are reviewing their current setups, and they're looking for opportunities to shorten the chain to the extent possible in the context of T+1. And there is a big push moving to the financial market infrastructures directly. That is something we can clearly see. And that is something we obviously want to support. And that then also requires us to have the relevant connectivity solutions and the service offerings which clients are looking for. T+1 is a very big topic for us. As you know, I mean, we have a big campaign. We have a monthly newsletter. We have a big project running internally to make sure that we support our clients best we can. And obviously, we are also a very active player in the industry working group and in all those European forums in order to make sure that we support best we can from our perspectives the T+1 journey in Europe.
Yeah. So I guess for me that one of the most important things about discussing this is the fact that we're actually discussing an operational reality. That this is not an idea, this is not a concept. This is something that Matthew's life has already been impacted by. And I mean, curious, Matthew, from your perspective, in terms of if you can just give us a bit of a view for what does it look like today as a live user of this. What is the shape of this as something that you're tapping into every day?
Yeah, absolutely. So we're. And the credit must go to my team, who were a big part of making this a success and packaging up this proposal actually before I took the role. And they've been working with Marcus's team for some time. But the team were very deliberate and intentional in terms of looking at where we went live first. So we do have a roadmap that we've been looking at in terms of how we add more into the CSD, the pan-CSD model. And I think that's important for any large firm. Like big bang change is scary and tricky. And so actually thinking about that phased way of doing things is really important. So we're live today on fixed income business, predominantly in Austria and Germany. So 2 markets live so far, with more to come as we go through the year. And the team were really focused on where we could then really see the benefits. So one of the things that was really key for us is this kind of certainty of the benefit that we were going to see, which is why we wanted to step into this quite carefully. And also, by going live with fixed income early, it's a very natural intersection between liquidity, funding, and settlements. So we were quite keen to spend the time up front to work with the settlements teams across operations more broadly, across colleagues at Clearstream and others, to make sure that we could really prove the model, give ourselves that certainty. And then because of the way this has been structured, we can then add more and more in, and we see the benefits starting to sort of amplify. So day to day, I mean, to your point, like this is live, it's working. We took Austria live a couple of months ago and Germany more recently. And honestly, from what I see in my role, is less escalations and less friction. Right now, that's because of the seat that I sit in. But for the teams, we see fewer urgent escalations for funding, for blockages, for things that are being held up. We're seeing improvements to things like fail rates and associated penalties there. So yeah, it's a real like it's a tangible live use case that's showing the benefit of pooling more things into a structured setup. That means that we're reducing that friction, and then, like everyone will be experiencing, excuse me, we're all at the moment trying to figure out how we can do more at the same time with things like T+1, but with everything else that's happening internally and externally. So just removing some of those very real, very time-consuming escalations, critical time crunches, liquidity crunches, whatever, means that our team's spending more time on, I'm going to call it more valuable work, rather than just unblocking, and I think you said it earlier, massaging the pipes.
Yeah. No, which is a fascinating point. I mean, ultimately, is, if you think about, as you say, the idea that all we're in the game of at the moment is trying to do more faster. Everyone looks at the exception handling at the front end of the trade, but actually, as you said, the ability to not be badgered by people saying, okay, well, look, we've got to top up the funding here, or we've got to push this through there. That all of it comes back to just capacity and FTE, doesn't it? Yeah.
Barney, I think you spelt this out in the paper pretty well, but I think one of the things that stands out in terms of the way that Matthew and the Barclays team have gone about this is just the connectivity between network management, treasury ops, and also the fixed income financing desk, where for some firms these can be very separate groups that engage occasionally around whether it's day-to-day or escalation management, but to actually get those groups in a room and have a well thought through discussion around the future of the business and how efficiencies can be gained is really, I think, the key difference here. And kudos to Barclays for being able to do that.
No, you're right. It's a very different, I mean, it was one of the things that came through, as you said, when we were writing the report, but it's a very different seats at the table in terms of the number of people that are engaged on this and the number of people that are ultimately benefiting from it. Because I think, we've had many cases in the past, if you think back to when there's been a major kind of capital or treasury event, when operations have basically just kind of gone and fixed it without, the oldest thing that treasury and ops never speak to each other. The idea that you can have one side of the bank going and doing something with no idea what the other side of the bank is doing or benefiting from. This is about bringing that together. And I think, as you said, Marcus, it's one of the biggest, for me, watching this, is one of the biggest differences versus how we work today.
Yeah, and look, it's been very instructive for us at Clearstream in terms of how we talk to customers as well, because the danger, well, not danger, but just the standard operating procedure for us is to have very good dialogue with network management or operations, but to actually engage and be sponsored to engage with the treasury people and increasingly the guys who do the financing, because this is where this sweet spot is. This fact that there are these hidden costs that we don't see. We see settlement costs, right? And when you look at this type of model change, you might scratch your head and say, well, is it worth the time and effort from a reduction in settlement fees or something like that? And the answer is probably not if you are a large firm. But if you have the full analysis around the cost of capital of the firm and the ability to self-collateralize, that's where those big numbers start coming from. And probably a few people fell off their seat when they read the paper, Barney, because it was big numbers. But that's really, I think, when this gets very interesting.
Yeah. But I think, and that's the key that I want to come on to, exactly that. It's big numbers, but not for ops. As we were saying earlier on, it's as you said, if you kind of look at it with one eye closed on the ops side, it's maybe self-funding as a project, but ultimately where it really kicks off, as I said, you can disagree with the numbers in terms of, whether they're double or half right. But, at the end of the day, the real kicker comes in when you cross the corridor and actually speak to all the people who are actually managing the cost of capital. Yeah. So before we come on to that, because I think, that point about becoming self-funding is so critical. Dirk, from a Clearstream perspective, can you maybe just, so we talk about how Matthew's using it, can you maybe just give us a very quick map of what it looks like from a Clearstream angle in terms of the platform?
Yeah, absolutely. I mean, it is not that we have built up a new platform on our side, right? So we are simply leveraging what we have already, and we try to make it as easy as possible for clients to use it. So a direct participant having an account with us will be able to use a pan-European CSD solution automatically. So it is the same connectivity, it is the same look and feel. And for us, it is just not being only the German CSD anymore. It's a proper pan-European CSD, and that is also why we have done the renaming to Clearstream Europe last year. And it is also for us to continue investing into the capabilities, because it's not only about settlement. It is also about asset servicing specifically. It has to be seamless across the various markets. So we have invested into one common asset servicing platform for our ICSD activity, as well as our activity in Clearstream Europe, as well as that we have one collateral management platform, and it's also aligned connectivity channels. And then we have thought about how can we link those two the best way possible from a client perspective. And that is how we then come to solutions like the smart realignment solution, where we offer clients having a delivery obligation in the ICSD and a position in the CSD, that automatically that position is going to be realigned where it's needed, as well as the other way around, of course, and smartly connecting the things we have and enriching them with new service capabilities around asset servicing, around tax. That is what it needs. Basically, we have to have all the different things clients are looking for in order for them to really start consolidating those kind of activities. And that also includes things like our trade flow hub solution, where we ensure that not only OTC activity can be consolidated, but also CCP and on-exchange related activity, because only then there's true consolidation possible. And we know all of that, and that is what we are investing into, and that is what we are committed to continue to do.
Yeah. No, brilliant. Thank you. And so I suppose, so there's a few pieces there to drill into. One is the scope of what we're talking about. And maybe Marcus, to come to you first on so we talk about this as fixed income. So as Matthew said, very close to the treasury side. So obviously they're very good. But as you said, Dirk, this is largely focused on OTC. Be interesting to see, Marcus, where you feel the sweet spot is for the this pan-European CSD model at the moment. And then Matthew, what does it mean for you in terms of just making it happen? Because I think this idea that you can't just turn up and say, right, I'm going to do this today. There's a lot of work that needs to go into being even kind of at square one kind of thing. So I don't know, Marcus, what do you think in terms of where you feel the natural scope of this is right now?
Yeah, again, back to kind of client selection and understanding the client's business. So clearly fixed income, this model is right for time. We've proven it works, and I think that's where you see very clear benefits. Dirk mentioned this new segment of entrance to the market, the neo brokers who would look at this for other reasons, just simplification. They cannot understand, and maybe we should all ask this question, why a startup entrant to the space would be opening up accounts in multiple different markets around Europe, right? The expectation is you wouldn't need to do that. So again, I think that's a very specific use case. Where the limitations come in, all around asset servicing, and I think equities at the moment. Whilst we have clients who do access Europe for equities, we have to be honest as an industry that we have not harmonized in that space quite the way that we should. And we could do a number of webinars on that particular topic, and that has the attention of regulators right now. So I would say a large broker dealer that is running a prime brokerage business, this is probably not what you would do with your equities at this point in time. But clearly that's the aspiration, that as Europe is simplified and the work that Dirk mentioned around our asset servicing capabilities, us working with asset services in local markets, the intent that would be to bring equities into this. But I think that would probably be the only place I would just pause for thought in terms of the model. But it's very much a conversation based on the client's activities.
Yeah. But I think for me that, and we chatted about this before, but I think for me, the realism of that, to be able to say, look, there is a place where this has a real sweet spot right now, and there is a place where it doesn't yet, is so key in terms of this isn't necessarily the silver bullet that's going to do all assets across all of the European markets today. And the idea to not be kind of overselling, I think, is so key. But actually, this is something, as Matthew, as you said, that is delivering real benefits to you today for the activity that you've transitioned. And the key difference basically being, as we said, asset servicing and some of the other areas that essentially you go
just things like trading of rights around dividend dates, these kind of things. There is a real need for people who are engaged in this activity. To be as close to the market as they possibly can, and that's a segment that's well served. But again, I think if we're serious about European consolidation, this is something in the next few years that we're looking at to improve.
But so back on, I suppose, so Matthew, to the point about this idea of becoming self-funding kind of thing. I mean, obviously, the biggest change on this facing an FMI is that you are now basically managing your own balance sheet entirely. You have no, you have no wiggle room, no bank to be able to turn around and say, right, okay, don't worry, here's some intraday credit, all this kind of stuff. To get to that point, you are obviously, you've had to go through quite a journey in terms of getting to the point where you're actually able to say, do you know what? We are all right. Basically, we've got the technology, we've got the visibility, we've got the processes in place. Do you mind maybe just walking us through what that looks like in practice? Because it's not a small step.
No, it's not. And like I said, the big credit to the teams internally who've put the work in to make it as smooth as it was. It took an awful lot of upfront planning. So I think that was one of the big things that we invested a lot of time in across the technology teams, operations teams, and then into the different parts of ops, the fixed income desks and treasury. There was a lot of work done to make sure. One of the main things was that we all were looking at the same data. So one of the things that fundamentally, our settlement systems are the same as they were before. Our collateral management systems are the same as they were before. But what we wanted to make sure is that we had complete alignment insofar as we could achieve internally, so that people were looking at the same data at the same time, using the same sorts of tools, so that we could all see what was happening in our accounts and make decisions off the back of it. And the projects that we went through to do that analysis and then, like I said, get live with that first market, there were obviously bumps in the road. There always is, right? We have to some of these things we learn as we go. I would say the support on Clearstream side and Barclays side was really good to make sure that was done smoothly and those hiccups were resolved. But it was all done with that one data, one view of the truth sort of focus in mind. And then, I mean, really, like the benefits then kind of come off the back of that at scale as you add more scale to what's onboarded onto the platform. But internally, there was a lot of work. I think we touched on it a bit before. Alignment amongst the stakeholder groups. A lot of good work done during testing to show people how it would work. So giving people that confidence that we are going to be able to use this platform at scale. We're not going to see the operational issues that we might all be worried about. Ultimately, keeping in mind, like Marcus said, clients are ultimately at the end of this. So actually, whilst this might be nice operationally, we also need to make sure it works practically. And that was a big part of proving to our businesses, whether it's the trading desks or our treasury desks, that ultimately we had very high confidence that once this was live, we would become operationally more efficient and improve the client experience. Which is, I mean, so it's fascinating. I think that the more we talk about it, the more different this feels from just kind of like, it's not just a lift and shift kind of thing, that there's a fundamental. We've talked about different people around the table. We've talked about quite a lot of re-engineering, as you said, from your own. I hadn't even thought, actually, the idea of being able to just make sure everyone sees the same information. I mean, it's not a small thing. To then be able to action it is a whole other thing. But, there's a lot of differences here versus just saying, okay, look, we're just going to do the same process, just with a different name. But Dirk, from your perspective, I mean, so there's quite a lot of
things that are characteristically different versus how we've been working in the past. As you've seen this journey, and you've mentioned obviously you've got a kind of increasing roadmap of what lies ahead, but what would you say were the big learning points for you through the implementation of thus far, in terms of actually how you describe this solution today and how you work with it versus what you would have described it as this time last year, for example?
Yes, I mean, for us, it is also a matter of learning along the way of what clients really need in specific contexts. And that is something we will always have open ears for and make sure that we are going to then consider it, like the smart realignment solution, for example. But then there's also a lot of technical knowledge needed, right? Especially in the context of T2S and the cross-border activity, especially when you look at some of the instruments which are dual listed, dual issued. There is a big challenge to deal with those things. And we have, thankfully, a big team of key experts knowing these things inside outside, and then it's for us to orchestrate internally that those people all very closely work with each other, whether it's my product team on settlement and asset servicing side together with network, but then also the colleagues from IT and operations to make sure that we really understand what needs to be delivered and make sure that we get the right things in motion. And then a big lesson learned for me as well is you sometimes have to be very patient, because if you need technical changes at T2S, it can take quite a lot of time, right? Because you first have to explain what you're looking for. You have to convince the other stakeholders it's a good idea to do it. And then you are going to be in the deliverable cycle, the prioritization cycle of T2S. And it can easily take a year or so until you really get what you need in order to move forward in a certain aspect. And that is something which is really important to understand. And we have a lot of experience around that now. And the other thing is the PSET challenge that we have a lot of clients which would like to consolidate, but which sometimes face counterparties which have difficulties to use the place of settlement the right way in the instructions, because historically it has always been a Spanish equity is going to settle in Spain and the Italian one in Italy, and then basically to instruct in a way that the Spanish equity can now settle between Spain and Clearstream Europe, if for some market participants a challenge which needs to be dealt with, and for some it is easier, for some it is more difficult, and for the ones which have still difficulties, I would really like to encourage every market participant and agent to look at these things, because it's holding us back to a certain extent also from consolidation in Europe, because if one side would like to do it and the other side simply technically can't because the system is outdated and not easy to change, it is holding us back collectively. So I think those things are really things which we have to overcome in the near future now.
Yeah. No, great points. And I mean, the PSET one is a classic one, isn't it? That just decades of hard coding in terms of Spanish stock will always be settled this way. To unpick that just adds to the overall the P&L, I guess, of the overall project, and just more things that you have to put into the project to make it a success. So I guess in the few minutes that remain then, so Matthew, from your perspective, obviously this is, you've done all the hard work, as you were saying, you've got the visibility, you've got the kind of, you've got the sunk costs essentially. How do you see this playing out in terms of actually being able to really kind of keep on maximizing and sweating the investment that you've made?
Yeah, so look, I think this is, like I said, it's a journey we're on. We've already started. We're already seeing benefits, which is great. And the more we add into that platform and this sort of pan-Europe CSD model, the more we will see those benefits landing in the organization. And we are very focused internally and on simplification, right, which is a theme then across the industry and across Europe, certainly. So this is a real tangible way of us delivering that for our firm. The other thing that I'm very focused on in my role, and I know the treasury teams internally are focused on, is like trying to get consistency and predictability. Right? And one of the big things that this does for us is by removing some of those like early morning or late day kind of fire drill type activities, by getting ourselves into the platform, getting something that is, to your point, sort of self-funding. We're seeing less of those blockages and those issues. And as we do that, that means that our settlement cycles are more predictable, our funding needs are more predictable, we can more efficiently manage them. And it means that we can then scale this, right? So as we add more in and more stakeholders are brought into this sort of platform, more regions, we can then amplify the effects that we're already seeing. And that sort of efficiency for the operations team, really important. And then the predictability of our funding needs and our liquidity usage is then something we can really hone in on. And the last piece for us is then we can then do more deep and rich analytics. You know, what businesses are using which liquidity, which collateral, how are they being funded? Are they being funded in the most efficient way? Are they taking the cost for that funding efficiently? So bringing things into one space and making things simpler is a big advantage.
Yeah. No, I've never really thought about it, but to your point, you've got the kind of once the dust settles and you have that predictability and stand, you know, and kind of regularity, a whole new wave of benefits suddenly opens up, as you said, in terms of once you've got surety, then suddenly you can get creative about what you do after that, can't you? But you know, without that surety, you're always going to be on the back foot and always kind of underutilizing what you've got.
Yeah, and whilst the teams are focused on dealing with urgent capital, cash injections or whatever, they're not focused on helping with that sort of analytics. And so, we're trying to then free them up to focus on those second order benefits as well. So it becomes a very compelling case. Yeah,
and so Dirk, final comments to you, really, in terms of, obviously, you know, that's Matthew's view of how the kind of runway looks from your perspective. We've got a few interesting things going on in Europe at the moment. You know, this time next year, for example, and looking slightly into the kind of further ahead, how do you see this solution playing out in terms of the kind of major milestones? How do you see it looking in the near future?
So, I mean, one thing is that we hope that there will be success in having migrated a lot of further markets for Barclays at that point of time. Similarly, we are working with other clients on those kind of consolidations. In parallel, we are going to continue investing into our platform, and it is like our clients tend to connect to us directly in order to shorten the chain. We are doing the same thing. So we go direct wherever we can as an investor CSD into the relevant local CSD. And then it very much depends on the service capabilities of this local CSD, whether we also have a local market partner on specific areas of asset servicing. So we have very good work relationships with local agent banks. So if there is a need to support certain activities, then obviously we are going to very closely work with them. We are also investing into our own asset servicing capabilities. We, for example, have rolled out proxy voting 2022 for all markets across ICSD and Clearstream Europe last year. We are going to continue to invest into those capabilities, and we just make sure that whatever our clients are looking to get from us as a service, that we are able to deliver. And that obviously also includes equity. It is not that we cannot serve equities. Of course, we have many billions of equities, and we are absolutely able to serve them. It's more this very last minute trading activity, especially in the context of rights, where you then sometimes have the challenge to execute those things cross-border. But equities in general, I mean, we have seen a lot of equity portfolios which have been moved to us. We are absolutely happy to serve them, and we now continue to invest into the asset servicing capabilities to also take the last mile and make sure that we will be able to successfully deal with some more complicated things.
Yeah, there's a lot to do, isn't there? Yeah. No, so look, I mean, thank you so much, everyone, for making the time to go through this. I mean, I think for me, what really stands out is the reality of this, that it is a daily operational thing, you know, solution that is making, Matthew, as you said, your colleagues, you know, lives more standardized, more predictable, and therefore obviously more efficient. And I think, you know, obviously, Dirk, a lot of work to be done still by the sounds of things, in terms of that, not to be done, but ultimately a lot of work to continue to happen over the next little while. But for me, this is it's a really striking to go full circle to the beginning, a really striking opportunity to raise significant amounts of benefits from the way that we work today across capital and across operations. So if anyone's still curious, please do make sure you download the report. But more importantly, please reach out to Dirk, to Marcus, to Matthew if you've got any questions and you want to dig into this, because obviously this is all about helping you to understand what this is and how it looks. So thank you so much, guys, for making sense of this, and looking forward to seeing how it evolves.